Celsius stock reported solid earning and it has 3x potential from this price point. What's up, homie? This is Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to Howieverse, where investing is driven by data. In this video, we're going to look at Celsius stock. First, we're going to look at the price action, which has 2x to 3x potential. And I cannot stress this enough. The second thing that we're going to look at is the business fundamental. We're going to deep dive into the business so that you know what you own. When the stock is not going to your expectation, you won't panic. I'm not financial advisor. I'm not giving financial advice. I'm just giving my perspective on stock analysis. Let's do this. Looking at the price action, this is what we have. The first thing that strikes me is that we have this resistance over here at around $35. If Celsius can tag or break that resistance, then it's going to go higher. But what I'm worried about over here right now, before we're going to get that 2x potential, what's gonna happen with Celsius is that it's gonna tag this line and then it's going to tag this line. If it does tag that line from that $35 level, then that is about a 27% drop from there. That is pain right there. However, on the upside, what you can look at when it was an all-time high, this is $100 stock, right? So if we take that high, like the current price, and then put it up over there, that is about 200% gain. So the question is, can Celsius, or does Celsius has the business fundamental to achieve 200% gain? Let's look at the business. Here we are looking at the business. First thing is the balance sheet. So the first thing that strike out to me is the $1.75 billion in cash and inventory. The inventory is not going up as much. It's only going up at around 8%. And the thing with the branding over here is at $1.28 billion that the investor, when they invest in Celsius, they're paying for this much branding. Also, there is this promotional allowance that is for kind of like a marketing or something that is going up 30.2%. That is just too much for me. I don't know. Maybe there is no issue over here that I am just exaggerating. Nevertheless, these are very big chunk of the balance sheet that eats up the money, right? And what we're looking at here, that is a good news, that they can pay off their entire current and the long-term debt in 1 quarter. In only 3 months, they can pay everything off, which is really good. So with that, I'm going to give the balance sheet a B plus. There are plenty of cash to pay their current liability and other expenses. So it's really good, but the branding, which is a non-cash value, is actually too much for me. The next thing we're gonna look at is the financial or the income statement. Here we have revenue jumps up 137%. This is unheard of when you're looking at a business that is selling drinks, okay? This is due to the merger or the acquisition that they make with the Alani Nu, and there's because the Alani Nu is started by an influencer. That's where the branding is coming from, and that's why investors are paying also for the branding. However, what strikes up to me here also is the cost of revenue that is going up at a higher percentage, 158%. So that is a lot more than the revenue, right? So they have a scalability issue. That's why the gross margin has been compressing from 52% to 48%. This could be due to the one-time issue because there's something going on in the Middle East that keeps the oil price higher, thus keeps the aluminum cost that they put their drinks in higher. That could be one factor. So if that is the case, I don't think in the next earning quarter that is going to get better. Okay, so the gross margin compression likely will get worse or stay at this level. However, for the SG&A, for the selling and marketing, it's only going up 95%. So due to the acquisition and also the merger of two businesses, the core Celsius business plus the Alani Nu, they are consolidating their cost. So overall, the operating margin is improving from about 16% over here all the way to 18%. The thing that I don't like is that I never like dilution. If you look at the bottom over here, we got 9.5% dilution. Not too bad considering that the revenue is increasing more than 100%. So I feel like they got a deal out of this M&A. So yeah, they're not diluting too much, but I still hate that as an investor, you're getting diluted. Another thing that worries me is this one right here. So the total revenue for the quarter is $782 million. The Alani itself is bringing in 368 million. Minus the Alani, minus the Rockstar, the actual core Celsius sales is only growing at 5.7%. That is kind of concerning for me for a growth company where where the growth of their core business is only growing at about 6%. This is really concerning. So the thing with the future growth is that it's going to come from this Alani, right? This Alani is almost half or not even more than half of the business right now, and it has the branding backing up the Alani. So this is definitely something that I need to look at because from this point on to the future, Alani is going to be one, or if not, the most important growth driver for the company. The next one, we are going to look at the cash flow statement. The cash flow statement, when you look at this cash flow minus the capex, that is a 31.5% decline from last year, right? Last year ended March 31st, which is a very concerning to me. But if you look at this one-time charge of this $224 million, if that is not there, right? If that is not there, that means that it will bring your cash flow up by 181%. So this is why you cannot just trust whatever the numbers is presenting to you, because you're gonna miss every single details, right? This is why you need to do your analysis, because this is very important. You need to develop that ball of steels to essentially hold this stock if you own it, right? And basically if you have the thesis with you, you will be more likely to not panic sell, right? Because that you know what you own. As you can see, the free cash flow is going up by 181%, where the revenue is only going up by 131%. So this is a very, very good news. So if I annualize this number, right? 66 million plus this 224, that is $1.1 billion in cash flow every single year. Now let's look at the headline, right? The headline says that it has trailing PE of 79. That is in bubble territory. But when you actually do the analysis, when pricing in everything, with the actual EPS or earning per shares that is multiplied by 4, that is $1.32. Mind you, this has no growth for the next 9 months, right? So I'm just projecting it based on this quarter alone. And the price currently trading at 33. So the actual PE that you're paying for the 4 PE 2026 is only 25, not 79. So this is still a little bit high for this company, but not bubble high. Okay, so now let's look at my own projection. So for my base case, where they have SG&A leverage because they're combining or marrying two companies all in one. So they can be more strategic or be more smart with the SG&A spending. And also the Alani new growth accelerate at 25%. This is considering the core business of Celsius is growing at around 6%. So the consensus average is 165. That means only 25% growth at 20x4 PE. I have a very bear outlook for this company. So Alani New is a celebrity influencer brand with a limited shelf life, like Kylie Cosmetics and Poppy. I could be wrong with this, right? If you look at the bottom right here, Katie Hearn, I hope I don't say that incorrectly. I have never heard of her before jumping into the analysis and knowing more about Celsius business. So that is kind of concerning to me. And also they are partnering with PepsiCo. There could be a conflict of interest between the two. Like Pepsi wants their own stuff to go out of the market, and then they are just going to leave Celsius behind. That is also a very big red flag for me. And also the share dilution. I don't think they're going to do that anymore. So this is more like a lower probability going to happen, and also the gross margin compression, that could be just a one-time thing or like a short-lived nightmare. Nevertheless, the Celsius core brand decelerates towards negative growth is one of the things that is more likely to happen, right? So in 2022 they have 108% growth, 2023 102, and in 2024 it's only 3%, go to 5%, and now it's at 6%. That is kind of concerning to me. I hope they can fix this, but I just don't know how they are going to, because they are going to push this Alani and also Celsius at the same time. So the compression of the Celsius growth, it might get decelerate even further. The bull case is a lot more brighter. So Alani growth at 40%, and it has revenue of $2.1 billion. Celsius revenue of $1.47 billion. This is just assuming that it's only have 6% growth, okay? This is for annual. So this is the number that I'm much more going to be happier if it gets there, right? But if not, equally likely the bear case is going to happen. Nevertheless, when you look at the total revenue, that is 21% solid growth. That is solid, 21%. And I don't think my bull case is like too exuberant, and that this my bull case is also not that conservative either. So it's sitting in the middle between conservative bull case to like, oh, this is going to the moon bull case, okay? And it has 19.4 PE at 0.9 pack ratio. This is definitely low for 21% growth. So if you look at the Monster, it has pack of 2.7, Coca-Cola at 4, 3.8, 1.7. So a pack 0.9 pack is definitely lower. Even if it just go to this Monster area, this stock can jump to $66. In conclusion, I am not jumping up and down for this stock. It's just because that I cannot see the path of the growth for this company, it might be different for you. This is just for me that the bear case scared me the most. In my opinion, ELF stock has stronger bull case and less scarier bear case. I'll link the full video analysis over here somewhere. You can check that one out. It is because that the branding of ELF that has Bieber brand backing it, okay? And I have never heard of Caddy Hearn before jumping into the Celsius analysis. Hey, if you're still here, please hit the like button. It will mean a lot to the channel, and consider subscribing if you haven't for more video analysis like this. See you in the next one.